Hi guys, welcome to the daily charts. In this video we're going to discuss the concept of beating the market and what does it really mean. So when investors are debating traders, short-term, mid-term, mainly day traders, what does it mean to beat the market? And they're making a point that without doing anything, you have a portfolio. Let's say the portfolio is $100,000. Let's give you an example. Yesterday the SPY moved up 1.5%. So the return is 1.5% times $100,000. So the profit per day is, without working, without doing anything, is $1,500, $1,500. Now, how does it apply to a short-term trader or a day trader? First of all, when you are investing, you are exposed to gaps in the market. This is obviously not a part of the risk that a day trader takes. On the other hand, the day trader must work 4 hours, 3 hours, or 5 hours according to his strategy to achieve 1%, 2%, or 3%. We'll discuss it in a bit. But the idea here is that day trading, as opposed to investing, is a job. Okay, so you need to work. Therefore, you should expect to get paid. Now, what does it mean to get paid? Let's say your expectations are to make 10 grand a month. So 20 trading days on average. Obviously, it's never going to happen, but you need to gain $500 or net $500 in order to reach your target of $10,000 per month. And it doesn't matter really how big your account is, because you can be leveraged when you are day trading to some degree. And again, it depends if you trade a US account or a foreign account or offshore account. Let's not discuss that, it's going to be way too complicated. But the idea here is that in order to day trade and to beat the market, you need to work. And if you need to work, you have to be obviously sophisticated and professional. So if the S&P yesterday delivered, as you can clearly see, 1.56%, obviously it's not going to deliver every day 156%, 1.56%, sorry. So how can you, as a day trader, on a day like yesterday, beat it? Keep in mind, an investor is looking at this whole portfolio, which is $100,000. Let's say you do have an account with a broker of $100,000, but per position you're not trading $100,000. You're most likely trading 20, 10, sometimes 25. Again, depends on the strategy. So again, the idea here, if you are trading, day trading or short-term trading, you need to work. Okay, you need to put on the work, prepare the trading day, maybe trade 5 trades, maybe trade 20 trades. Again, that's a personal strategy, but the idea here, you need to have a strategy. And one of the preferred strategies is to trade stocks that are weaker than the market. I will give you an example in a minute. Let's say a stock that was really weaker than the market yesterday was Oscar Health. So you need to trade Oscar Health, which ended up down 17%, but that includes the gap. So for a day trader, assuming you do short it early in the morning and you're so brilliant and you manage to short it at 16, so your entry is 16, and you stay the course, and you end up with $1.50 winner, which is on $16, let's call it, that's 10%. Okay, that's a 10% winner. If everything is perfect, which is never is, but let's say it is. So 10% on your $20,000 position, it will be, in this case, 2 grand. So by making one smart trade, you with $20,000 position exceed the profits that an investor is making with a $100,000 position. And again, why does it matter? Because it's a different ball game. How clever, smart, professional, aggressive, and again, and patient you need to be to start the trade early in the morning in the first 5 minutes, and this is the 5-minute chart, and wait 6.5 hours, close the trade at 1450 or 1460, and get on board with this plus 10% winner. So let's put it this way: this never happens. Okay, it can happen, but the chances for that are not very high. On the other hand, if you, for example, take advantage of this pullback and short the stock at 1620, and again, it's personal strategy, you can get on board with 3%. Now, if you are a professional trader and you stay the course and work 3 to 5 hours, can you deliver 3 or 4 trades worth 3% in a good market, up or down, which means you are going to be up 12% on an average of $2,000 position? This is $2,400. Now the question that remains is how many losing trades you're going to have, because not all the trades are going to be winning trades. Even if you are Michael Jordan, even Michael Jordan misses a free throw or a layup or any shot from outside, and you are not Michael Jordan, you are not LeBron James. So nobody is actually trading LeBron James. So basically what you need to do is develop a strategy, a form of working, or a plan, a blueprint, where every day you go for trades. You don't have to go for the jugular for the 10% move. If it happens, so be it. But you can risk per trade on average of 1%. I talked about it, I think, many times in the past. So if this is your max risk, 1% per one trade, okay? And it doesn't matter if your position is 20K or 50K or 5K. It doesn't matter. That's your personal decision, how big your position is. The market can easily accommodate 20K, 50K, 5K, 12K. So again, for example, yesterday the volume in Oscar Health that dropped, like I said, 17%, was nearly 50 million shares. So 2,000 shares per position, 3,500 shares of meaningless. It's meaningless to the market. The concept is that you need to work versus investors, which is not working. So you need to put out the time, and of course, if you are working your day job, not possible. So you need to be, on one hand, giving away your day job, if you have a day job, and working in the business called trading. And then doing the right thing, meaning developing a strategy which can be working for 4 hours or 6 hours. Some traders try to do it in 30 minutes. I don't buy into that, but let's say you can do it in 30 minutes. You're a genius. You can work 30 minutes and deliver a salary that is to your satisfaction. That's fine. Most of us will have to work, and again, work means creating trading opportunities along the trading day. And you can clearly see that, if you miss them, I'm just giving you this Oscar example because it's a great opportunity. It was a great opportunity yesterday. So let's say you miss this entry because you're looking at many other stocks. Again, now you have another entry, which, again, if you are a day trader, you shouldn't miss, because now you're shorting the worst stock in the market after it moves higher, and you have the view up, and you have a clear stop loss. So again, the technicalities are in this case great, and it also closes at the lows of the trading day. So the idea here is that if you can repeat this process of taking 4 or 5 trades, maybe 10 trades, and out of them, half of them will be profitable, and on profitable trades you will make 2 to 5% on average per trade, while losing only 5% on the 5 losing trades. So on average you'll have, let's say, 3% times 5 equal 15% on the profitable trades, and you're going to lose 5% on the losing trades, and the overall profit will be 10%, and 10% will be on the position that you decided. It could be a $5,000 position or a $50,000 position according to your personal account and risk strategy, and risk tolerance, obviously, and obviously if you have the money. So being that if you need to have trade $50,000 per position, you need to have at least $200,000 of buying power, meaning at least divided by 4, at least $50,000 in your account. Okay, so but that's beside the point. The idea here is that you need to outperform the market by working, okay, by putting the hours and by developing a strategy. And I'm just showing you one strategy that I prefer to talk about, and I know that's doable because I'm teaching it, and it's also teachable. So there are strategies which are less teachable. For example, trading the gap up and go. Every day you have a different setup, every day different risk, different stocks. It's a mess, but there are people that are excelling at that. So if you can excel at speed racing, so be it. Anyway, that was basically the point: how to beat the market trading every day using clever search. Clever search is simple; it's not that clever. You need just need a clever search engine on your trading platform. And technical analysis, again, not very sophisticated technical analysis. You just need to build around yourself a concept that basically covers everything. So not only the search and the technical analysis, but also the trade management, which is basically how you can make your money. Because if you don't have trade management or good trade management, no strategy is gonna be successful. Okay guys, I hope it was helpful and illuminating. Do like and subscribe to our channel. Thanks for watching. See you in our next video.